So this topic of audit readiness points us back to the world in which we all live as defense suppliers and defense contractors. And it begins with the directorate that's been put forth by the DoD Comptroller Office. The directorate they refer to as FIAR, Financial Improvement and Audit Readiness. The mission and the focus of this FIAR plan is to focus on the financial management of the DoD by improving internal controls, resolving those material weaknesses that have been identified, and advancing the department's fiscal stewardship. Now that spans both all branches of the department as well as those of the contractor community that support them. Audit readiness also includes DoD property, plant, equipment, operating material, and supplies. And it puts the highest priority on accounting controls and accountability for all mission-critical assets. So we're talking about accountability from the point in which something's procured to as it makes its way through the financial ledger to when it actually ships, and then as it's being maintained day in and day out through its life cycle through to disposal. Really, that whole area of focus is what's inclusive of in this FIAR obligation. Which leads us back to Kim to talk about the FIAR requirements for financial accountability. Kim?
Absolutely. So the FIAR initiative, it has two primary focuses. Where is the asset and how much did the government pay for it? And how much the government paid for an asset is, of course, determined by the Cost Accounting Standards, or CAS, which are audited under the Standards of the Contract Audit Manual, or CAM. The Part 8, Section 4 of the CAM calls out those cost accounting standards by which you will be audited under FIAR. I'm sure many of you are familiar with these. Here are a select few that are particularly pertinent to determining the cost of the mission-critical assets being audited under FIAR. And it is important that your business system supports these requirements. Part 8, 401, consistency in estimating, accumulating, and reporting costs. Your business system must record direct, indirect, and unallowable costs properly and attribute them to the intermediate and final cost objectives. With Part 8, 405, accounting for unallowable costs, the government wants to make sure you're not paying for anything fun, which is generally what unallowable equates to. And you will need a business system that clearly identifies costs that are unallowable and segregates them. Part 8, 406, cost accounting period. It's critical that costs are recorded in the proper period and are auditable to that period. This goes for acquisition of the equipment, of course, as well. Part 8, 410, allocation of business unit, general and administrative expenses to the final cost objective. And Part 8, 418, allocation of direct and indirect costs. Allocation of direct and indirect and G&A dictate that costs be consistent and traceable. And then finally, Part 8, or 411, accounting for acquisition costs of material. This is, of course, particularly relevant to today's conversation. And later on in the discussion, I'll talk to you a little bit about how your business system can be supported in that regard. Peter?
Thanks, Kim. Which moves us to the property management specific obligations that flow from this FIAR directorate. To begin with, the improvement in audit readiness of information is essential to effective management of mission critical assets. Now, how this directorate defines mission critical assets we see here. We see it defined as military equipment. You've got your ships, your aircraft, combat vehicles, etc. You have your inventory, which means your rations, your supplies, spares, fuel, etc. You've got your operating materials and supplies, your munitions and ammunitions and missiles, and then general equipment. And that relates specifically to material handling, training, tooling, and test tools, etc. So the kind of information that asset data relates back to in the financial picture is information such as the item unique identifier, or the IUID as many of you may know of it today. You've got category and type information related to those assets, the location of those assets, status, description, the custody, as well as controlling or financial reporting entity, which can be different, in fact, from the official custodian. So all of that comes back to the government's obligation to surface an accountable property system of record. So as government contractors, your obligation is to feed that data through to government systems so that it can feed back through to these accountable property systems of record within the government. And the government's objective here in this audit world is to verify the mission critical asset existence, the book to floor, and the fact that the records are in fact complete, the floor to book. So record keeping and asset management capabilities are critical to getting that data correct and consistent in order for the government to meet their end of the obligation in this audit world.